All right, let's answer some of your questions now. First up, Jenny, got a video question for you.
Hi, this is investor and hypnotist Peter from Framingham, Massachusetts, right outside of Boston. And I wanted to get the investor's opinion of GlaxoSmithKline. I've owned it for a while, and even though it's part of the biopharma space, it always seems to perform terribly. Thanks.
All right, thanks for the question. Jenny?
So we've owned it for a long time, too. It has performed terribly. It's been too long that we've owned it. The only money we've really made is from the dividend. One of the reasons we've owned this for so long is that we've always believed there's a lot of locked up value in the company. And now that they're spinning off their healthcare business, their consumer healthcare business, we think that some of that value will start to be unlocked. So they're spinning off the like I said, the consumer health care, which is like Sensodyne toothpaste. They're going to be able to focus and invest more on the pharma and vaccine businesses, which are things like vaccines for shingles and cancer drugs. And as that happens, we think we'll see probably 5 to 8% earnings growth ahead. It's trading really cheap, 13 times what we think are depressed earnings. So hopefully this is finally the beginning of value creation and value being unlocked. Hopefully there's upside from here.
Okay, thanks for that. Steve Weiss, a video question for you now.
Hi, my name's Elaine. I'm from Perth, Western Australia. I'm an investor and I'm also retired, and I'd like your opinion on Snowflake. Thank you.
Oh boy, I know where this is going. Steve Weiss, go ahead.
Yeah, I'm going to leave out the governance issues, or maybe I won't. To me, the company's got poor governance, paying the CEO so much that's ridiculous. But away from that, look, there's a portion of your portfolio where you can own speculative names if you typically don't. And to me, trading at 100 times revenue, it's speculative. It's growing like a weed. Everything I hear about the technology and the business is excellent, but there's only so high I'm willing to go in terms of multiple and valuation. But that's just me. You may have better appetite for that. But at this level of the market, I think these stocks are very risky.
Okay, thanks for that. Josh, to the video.
Hi, this is John in Upper Manhattan. My question's for Josh. I'm wondering if I should get out of IIPR. I've been in it since it was like 18 bucks a share, and I'm wondering if now it's time to move on into like a reopening play you've been talking about, like Leslie's or Boeing or Simon or whatever. Thank you so much.
All right, John, good stuff. Okay, innovative industrial properties. What do you think, Josh?
I have to confess, I had not heard of this company until I had to do some research to answer this question, but what an amazing story. So basically, they are the only publicly traded REIT that owns all of these grow houses and medical cannabis facilities that other operators then pay them rent in order to use. It's all above board. They're in states where medical cannabis production is not only allowed but encouraged. And they have this arbitrage because there aren't any other large-scale landlords, basically, who can step in and take on these projects. So if you're in it since 18, you've not killed it, like knocked the ball out of the park. It's 181. So I wouldn't say don't sell any. However, it's a really unique situation. There aren't any competitors. And this is a story that I myself want to learn a little bit more about. The one negative here, obviously, I'm not first discovering it like Columbus discovered America. This stock already has a huge valuation, 4.4 billion market cap on 138 million in revenue. So if you can come up with some negative reason to sell, maybe that would be it. Maybe it's fully valued. But really looks like an interesting story.